Welcome to Gyrostat, a next-gen income fund protecting your capital at all times. Our disclaimer: this is general advice only and does not take into account your particular circumstances. Today's investment challenge: the cash rate is at historic lows. How to generate an adequate income whilst protecting your capital at all times. David Murray concluded the retirement phase of superannuation is underdeveloped and provides limited choice for managing risk. Shown in the bottom right-hand side are the consensus gross yields now available from blue-chip high-yielding stocks. Gyrostat pays regular distributions at the cash rate plus 3%, currently at 5.2%. We buy and hold blue-chip high-yielding stocks, and we protect always with ASX listed call and put options. We have no borrowings. We have a track record since our inception in December 2010 of stable and rising returns, achieving 32% over 17 quarters, with no losses exceeding 2% for a quarter. The green line shows the comparison with investments at the cash rate, the red line with the ASX 200 index. The traditional approaches of buying high-yielding stock or an income fund, buying stock and writing call options, provides limited or no downside protection when stocks fall. By adding one more element, the bought put, we have created the next generation income fund. The ASX at their website note the benefit of buying put options to protect your portfolio. The challenge is how to do this in a cost-effective way. The options market is well developed in Australia and accounted for 32% of the Australian Stock Exchange revenue in 2014. The ASX has recognised the business opportunity to deliver and create the environment for world-class risk management solutions for investors. The chart shows the risk-return trade-off. We are the blue line. We protect the downside and participate in the upside. We vary that payoff line within bounds depending upon our business judgment. We buy and hold the blue chip stock, and we actively manage the options to restore that risk return payoff. We do this in a systematic way. When generating our investment ideas, we consider the yields available less the cost to protect. Our asset allocation has reference to but is not bound by ASX index weightings. Our execution capability comes from a systematic approach brought about by advances in technology. This enables a cost-effective protection solution to be in place at all times. A recent example: the Australian banks fell substantially from early April through to early June 2015. We are the blue line at the top. We have protected our investors' capital. We do this by protecting at the stock-specific level. The top bar chart reviews our performance on a quarterly basis since our inception. We have consistently protected when stock markets have fallen and participated in the upside throughout the investment cycle. Our team has broad experience in a wide range of disciplines, particularly in finance and the financial markets in the Asia-Pacific region. Full details can be found at our website or our information memorandum. We charge a base fee of 1% of the net asset value of the fund, paid monthly in arrears. Our performance fee is only payable if our absolute return achieves 3% above the cash rate, to align our incentives with yours. Full details are contained within our information memorandum. To conclude, interest rates are at historic lows. Those investors who have previously relied on interest from cash or term deposits aren't generating sufficient income to meet their requirements. Those traditional alternatives of buying high-yielding stocks or income funds have limited or no downside protection when markets fall. We've added an additional element to provide peace of mind with downside protection always in place. Gyrostat, a next-gen income fund.